I've been quite bullish as of late, and that's certainly going to continue. My sentiment is long-term bullish and medium-term bullish. I think inflation is going to begin to show itself once we have mass vaccination, and inflation is just simply good for nominal values of stocks, which will continue to allow the charts to run up in a left-skewed fashion. That said, today I was seeing some things happening. One important thing in particular that lead me to believe that some of this momentum in retail money might take itself off the table. And I'm not talking about GameStop or any of that crap that's happening with the short squeezes. I'm talking about the ARK Innovations ETF. This is a phenomenal ETF that comprises itself of many components, which I'm a big fan of, particularly the Crispr stocks. And if you look at a Crispr stock like Editas today, just relatively smaller cap, around 4 billion. I don't know what a small cap is anymore, but that's what it is. And compare its chart to the chart of the ARK Innovation ETF. They're basically the same, which leads me to believe that there's significant selling of the ARK ETF, which is causing them to sell their underlying securities, and can lead to some, pulling back of a lot of stocks. And I would view this as a buying opportunity. I am buying more and adding more to my Editas position. Finally, I've been waiting for this opportunity. Just literally talked about how my biggest mistake, a couple videos, was sell my Crispr stocks a little too early. Well, now I'm buying them back. So didn't sell all of my positions, kept some of my positions, but, could have ridden the wave a little longer. But it's possible these stocks continue to sell off. And if these stocks continue to sell off, it's possible we see a broader market pullback. Now, I'm not saying that stocks are dangerously overvalued and some massive move is going to happen. We're going to have some sort of, repricing of stocks more broadly and enter a bear market. I don't think the market is going to change. I think some sort of panic or rush to ring the register by people who haven't been prudent investors is possible and honestly likely. And I'm starting to see the signs that's occurring. So we'll see what happens. Despite that, the market was still at all-time highs today. If it comes, I will be buying. I am ready to buy more Crispr stocks, especially with inflation. What I don't want is cash. And I think everyone else feels the same. We're obviously used to 2% inflation. We know something happens to our cash, but it's not enough to really notice or care about because we like the liquidity of cash. Well, it seems a lot is changing in the world. Apparently every single asset management firm is calling the mayor of Miami talking about moving. So clearly if that's happening, you'd say Wall Street is the most powerful group of people in the world. Movements are happening out there. And there's a lot of stimulus, a lot of printing of money, raising of the minimum wage to $15 an hour. I think that 2% that we normally see in a normal, good economic environment is going to be different than 2% in a highly stimulative, evolving environment. So I will expect that, whatever percent it is, to root itself in stocks. Now, not only inflation is driving the market. That would be a problem, honestly. And I would look not to the market, I would look to gold and real estate in that environment. And I still suggest those as parts of your portfolio, even if they are gold miners and REIT stocks. Those are my two largest positions, actually. But earnings on a real and nominal basis are improving dramatically. 85% of companies so far that have reported earnings, probably more now that Microsoft and Starbucks are out, have beat analyst expectations. Analyst expectations are essentially what drives market sentiment and have brought us to these price levels. Yet they are being, yet again, this is the reason why the market rally has continued up until this point. They are yet again being exceeded, these expectations. And I think these expectations have been depressed, somewhat muted, somewhat concerned. So the fact that they are being beaten on top of that is kind of just beaten down this idea by the bears, by the long-term bears, by the bears who say current price levels aren't justified. I'm here telling you, yes, prices are expensive, and I'm ready. Bring it on, sell-off. I want that to happen. But I think that stock prices are justified, given that the market is forward-looking, earnings have improved fundamentally, company structure has been cleaned up, margins have expanded. Given that, with the multiple of inflation, means that stocks are just a good buy or a good hold, depending on what kind of position you're in and the kind of stock. Different stocks. I'm not saying buy every stock. I'm not saying buy DocuSign and Zoom and Snowflake. I'm saying buy Smile Direct Club, Crispr even though Crispr doesn't really have big earnings, still buy it. ExxonMobil, gold miners, GOLD. Warren Buffett has been a very anti-gold his entire life. In the middle of the downturn, June area, took a large position in GOLD, Barrick Gold, large gold miner. Big 180 by Warren Buffett, so take note about that. In addition, real estate does well in inflation. I would particularly look for residential and hospitality real estate, which is quick to adapt to inflation given they have short-term leases. And I would advise you to stay away from commercial real estate, which often has 10 to 20-year leases. Not going to adapt to inflation very quickly. The asset value will, yes, but they can't sell it and they can't cash flow it. They're locked into a lease. So until next time, peace out.